Outstanding. So, Andrew, thank you very much for bringing me in. Let's get our feet on. All right. I'm diving right in. So, my name is Steveo Stewart, Horizon Insurance. We're domiciled out of North Carolina. We serve North Carolina, Georgia, South Carolina, and Tennessee. If any of you out there have had any engagements here in the South, you know that we're notorious in South Carolina for our liquor liability laws. My goal today is just to go over some high-level conceptions and misconceptions about insurance. I feel that we tend to take insurance for granted. It's a set it and forget it. But more and more with the increase in expenses, this is coming to more and more people's attention. So just quickly, I'm going to talk about how is an insurance policy formed, even before we go into the misconceptions. You've got a general liability policy, and many people will assume I've got general liability insurance. Well, that is defined as that could be a monoline policy, which only offers general liability, or they could be referring to their business owner's package, which could have a variety of endorsements such as property, cyber, liquor liability, inland marine. There are a variety of endorsements or additions to that policy that may make it a package. The takeaway there is if you say you're insured or if someone tells you you're insured, that's just the tip of the iceberg. And what we're hopeful to do today is to identify some of the misconceptions and then speak to the realities. And then we'll finish out with just simply defining the different types of available endorsements and coverages out there. And assuming we have time to explain how they would impact your business or when you would or potentially not need them. So again, thank you for the time to the folks that are hosting, and let's jump in. General liability covers everything. That is, as I was just mentioning, yes, I'm insured. I've got general liability. The reality of the fact is that equipment failure, liquor liability, product recalls, employee injuries, none of these are typically covered in a general liability policy, but they may be covered or included in a business owner's policy, which is a general liability with a variety of endorsements. Myth and misconception. I do not need liquor liability for free samples. Absolutely not true. I'm not even convinced that there are many people out there that don't recognize the need for liquor liability. Without going into the weeds, this can be one of the greatest opportunities to protect yourself. Could also be a great opportunity for cost savings and cost avoidance, but it's also one of the greatest responsibilities that we have as restaurateurs, taproom, breweries, anybody that's selling or dispensing alcoholic, and I would go ahead and put an asterisk, THC beverages and everything in between. In short, you need to make certain that, especially let's talk about THC for just a moment, if you've got THC, that your liquor liability is going to extend coverage. It is not at all uncommon for THC to be excluded. It's just something to keep in mind. Also, liquor liability, you may be able to find options for reducing the costs by ensuring that you've got best practices in place and that there are several memberships, industry associations and carriers who are going to reward you for being members of those industry associations. So definitely look into that. And it is need no matter who or when or how you're handling the alcohol. If you're dispensing it, please make certain to check your policies for liquor liability. Property coverage includes breakdowns. Firstly, what is a breakdown? Well, if my compressor goes out on my walk-in, I'm just going to file that claim on my property insurance. Simply not the case. Most property policies exclude mechanical or electrical breakdown failure. In fact, property coverage is going to be the wind, hail, fire, theft, vandalism, your more standardized perils or exposures, as we call them in the industry. So you might utilize your property insurance in the event of a fire and you have a significant claim. I will go ahead and say this quickly. Property coverage is one of the most expensive coverages that you will have for the simple fact that it is one of the most frequent types of claims. The higher the claim, the more expensive the coverage. So as you're considering your renewals or as you're shopping your insurance around, please take a look at your property coverage. Are there any tunes that have been mothballed? Is there any of your production that you've added to? And is there anything on your depreciation list that wasn't there last year? If there is, that depreciation list should be shared with the insurance agent or broker so that they can make certain to provide coverage. Additionally, if there's something that's not there, back to a mothballing a production line, if you push that, if you sell some equipment, take it off of your list and thus don't provide insurance for that. Do not require insurance for that specific piece of equipment. It's great cost savings. Cyber and IP and intellectual property coverage is only for big breweries. It's just simply not the case, especially with our presence on social media, on the interwebs, or just simply branding ourselves. Any brewery using POS or putting their brand out into the stratosphere, so to speak, should really make certain that there's some level of coverage included. Now, there are going to be a variety of coverage limits. Oftentimes, for instance, Cincinnati is a carrier. They may have the cyber basic, cyber medium, and cyber plus. Just discuss with your broker or agent what are the differences between, and that might be dependent, that decision is going to be dependent on the size of your organization and the exposure in the general public. I only need coverage for the building. Since I'm down here in the very, very coastal exposed area of North and South Carolina, more than 80% of our business is within 5 miles of the beach. We have a lot of breweries down here, which is great, but we also have a lot of exposure. It's astounding to me how many folks just affiliate insurance with, well, if my building burns down, it gets blown over. I really recommend that you look at just beyond the building and what type of events, deliveries, borrowed gear. This is just everything that's property here as well as wherever else it might be. So for instance, my partner has got an events company, and if she's going to have a lot of money or exposure out at an event that could be a wind and hail issue, then that's some coverage that she would need to incur. I'll also say that your special events, if somebody's going to have a wedding or a birthday at your venue, it is best practice to encourage them to bring you a day of or special event policy, general liability policy. These are often very inexpensive, maybe a couple $100, and you go ahead and ask them to list you as an additional insured. This is $1 million policy potentially that says, yes, we're having an event at this location. There are going to be professional bartenders. That's going to be a cost savings. And we're going to have this many people. And it's going to put a layer between them and whatever goofiness may go on and you. So it's just one more opportunity to protect your business. And it is at such an insignificant cost if you look at the greater exposure at large. So this was actually supposed to refer to music, and music is a big deal on a number of fronts. First of all, if you have a general liability policy, please make certain to read the fine print. You can absolutely be disqualified from a program by having live music. There may be a very gray or fine line where the carrier says, yep, you can have live music. And then you get a letter in the mail because underwriting found a Facebook page that you were tagged in and you had an open mic. 3 people got up on the open mic and now you've been disqualified from a program. This is a real life example that just happened to a colleague of mine, and their premium went from the really nice and comfortable program that they were in, which was an admitted product, into an excess and liability product. Their burden went from $25,000 a year to nearly $50,000 a year, all from a single post where they were tagged and there are multiple individuals on the open mic stage. It is a really big deal that you have to consider every time that you remember you've got people out there taking pictures and videos. If you say that there's no dance floor involved and we only have singer-songwriter style musicians, it is completely plausible that if you have a fun event that gets it out into the open, and an underwriter from the carrier can see that. At renewal, they will review your Facebook and social media accounts. Just a helpful hint there. So keep an eye on your social media and make certain that it conforms to the application that you submitted for your insurance carrier. Now, one other thing I'll just add, if you haven't heard about the music industry attorneys going out and trying to find people to sue, maybe they aren't paying for the right type of licensing and they're playing Pandora or Spotify over their speakers in a taproom setting. Well, if you're not paying for a commercial membership, then you could find yourself on the bad end of litigation. So keep that in mind while we're talking about music. You can't get discounts or negotiate pricing. Well, the reality is you can absolutely negotiate prices, especially the higher the premium is, the greater the opportunity. Now, how do you negotiate prices? A conversation all in up to itself. Best practices. Me as the broker, I will submit a representation of you and your business to an underwriter. And that underwriter is going to say, well, based on the numbers, here's your price. And then I'm going to go back to them and say, well, yes, I appreciate that price, but look at this. Look at their kitchen. They've got splash guards between the the deep fat fryers. They've got fire extinguishers, automatic fire extinguishers over the cooking areas. They've got all these standard operating procedures for their safety program in the brewing area. These are the types of things where we're trying to, as your representative, make you look good. The positive sideline of making you look good is if you actually put these practices into place, you will have a safer work spot. You will have less likelihood for claims. And that is our bottom line, right? Is to help educate you and help minimize the risk for claim. When we present those best practices and history to the carriers, you are very likely to see some cost reductions. Again, this is focused primarily on the liquor liability, but you could even see what's called a experience modification with your workers' comp. One example here, if you're in North Carolina, a member of the North Carolina Craft Brewers Guild, the hospitality or the North Carolina Hospitality Alliance, we do have some specialty carriers that will extend as much as a 20%, sometimes 25% discount on that liquor liability premium. Nothing to shake a stick at. So those are some of the most common myths and misconceptions, but now I'm going to transition over into just defining what the coverages really are. And I'm going to do my best to not just, read it straight from ChatGPT, but to put it into terms that you as the brewer or the restaurateur or the taproom owner operator might understand. So brewers can insure their building and equipment precisely by using the same asset tracking that their CPA uses. The way that we market ourselves to a potential customer is to say, hey, if you don't have this really concise structure in place today, for instance, if you don't have an equipment list that's somewhat accurate, if you don't have any idea of how much money in tables and silverwares and pint glasses, we'll actually do an on-site eval and we'll give you a rough estimate of all of those assets, which you can then push over to the CPA. So bottom line, meaning if you don't have this information coming from the CPA, it might be worth asking your agent, well, how are you getting to this property coverage value? And if you can provide me with that data, it might be very helpful to provide to my CPA. Any updated inventory with a replacement cost values ensures full coverage. An updated inventory list with replacement value ensures full coverage. What this means is you will have most frequently a co-insurance option. If you choose 80%, then you're essentially telling the insurer that you're 80% accurate or 80% confident in your coverage request. Well, they're going to give you a higher rate per thousand because you aren't real sure. You might go over that and they're going to have to pay out more than your stated value. If you take the initiative and actually track the value of your assets and put it at 100% replacement cost, they're going to reward you. They being the carrier will reward you by giving you a lower rate per thousand. This is one of the most overlooked cost saving opportunities. And again, it's multiple benefits. You're now tracking your assets accurately. You can report that to your CPA for tax depreciation purposes, and you're only paying for the insurance that you need. To clean that up, a lower coinsurance rate, say 80%, is going to cost more per $1,000 worth of coverage than the highest coverage rate of 100%, which indicates that you are 100% confident that you have enough insurance in place. Exact valuation using asset schedules, no coinsurance penalties. Just briefly, coinsurance penalties can be monstrous. A coinsurance penalty, briefly, is if there's an 80% coinsurance penalty. In other words, you must do your best to insure 80% of the replacement value. And if you fall short of that, let's say you only cover 70%, you run the risk of them penalizing you and saying, all right, not only we're going to give you 70% of the coverage that you had in place, but then we're going to multiply that by 70%, which is compounded cost reduction, or rather compounded claim reduction. So you will get 70% of 70% rather than 100% replacement cost. I would encourage you to discuss this with your broker or agent, as it can be confusing. Lower premiums on the per 100 or per $1,000 of property insured, faster quoting and underwriting. What does this mean is when it comes renewal time, if we've got a nice clean asset schedule, goodness gracious, it helps us out tremendously when putting that in front of the carriers. And then finally, alignment with financials. It enables you to do your real life tracking during your financial meetings. Liquor liability, essential for any brewery that serves alcohol, covers injury or damage caused by patrons, required by landlords and venues, even for free samples. I mean, it is what it is. Everyone should have this pounded into their heads because this is one of the greatest exposures. And in North Carolina, it is not required to get your ABC license. South Carolina, it is. Industry association memberships, like mentioned before, may extend discounts from specialty providers like Hospitality Insurance Group. Liquor liability will bring to your defense, legal defense and damage finance, covers on-site and off-site events. If you're going to cover off-site events, you must indicate that in your application. This does help in those states where it's required for liquor licensing, reputation protection. What does that mean? Long short of it is you could find yourself in a really negative situation if you don't have the funds and the insurance there to protect you if somebody comes and makes an accusation. One thing that an insurance agent or broker will tell you is you don't have to be guilty. You don't have to be negligent. All it takes is to be accused. So when you're thinking about liability insurance, you say to yourself, I'm really safe. I'm not worried about it. It takes one ticked off patron or one ticked off employee to put that liability coverage to work. And again, make sure to check for discounts if you're part of guilds or industry associations. Equipment breakdown. As mentioned earlier, your property coverage does not typically include equipment breakdown. This is focused on failures of boilers, chillers, tanks, and more. Now, this is when we say boilers, chillers, and tanks, there's going to be a broad spectrum of equipment. It could be a byproduct of maybe there was lightning struck, or maybe there's contamination, or maybe there is a surge, power surge. In short, these are going to cover the things that are not covered in your property policies, and coverage value increases with the brewery size and complexity. The more equipment that you have, the greater your exposure for breakdown. Another side note, equipment breakdown is going to tie directly to, let's say, your walk-in or any type of your raw materials that are conditioned. Keep that in mind. You've got a chiller that goes out, and you've got a word, let's say, in the equipment. You've not just got the equipment, but you've got now whatever materials went bad. Non-fire loss protection. So if it's fire related, that's going to go back on the property. covers temporary repairs. So in the instance, you may have coverage to call somebody in at 3 o'clock in the morning and do an emergency repair. It will oftentimes include lost income. So if you've got to close operations or your batch is much smaller in a given period and you lost income, that is typically something you can include on your claim. And this is, yes, best for larger operations, but that's subjective, right? I mean, there are some really, really tiny tap rooms that are doing lots of distribution. Just keep it in mind and think about how much equipment you have, and please make sure to discuss it with your broker. And of course, it's scalable for coverage limits. And as your operations change, keep in touch with that broker. Product liability. This protects against injury or illness caused by your beer. For those of you who are serving it in-house, and especially those of you who are distributing, again, it's not guilt, negligence, it's accusation. This can come back and bite you in the butt, even if there was absolutely nothing done with your beer. So do keep that in mind as you are pushing your products out into the world. Key benefits: injury and legal protection both. But basically, they pull in the big guns, and the attorneys get to work on your behalf. It can cover contamination claims. It may be required by specific retailers. So if you're trying to get into those local groceries or even the national chains, keep in mind this is likely to be required, and make that inquiry with your broker or agent. Safeguards your reputation and includes legal defense. Now, also look and ask questions. Are legal defenses going to be subject to my claim limit, or are they going to be outside of my claim limit? So that means if I have $1 million claim, are my legal defenses going to come out of that $1 million limit, or are you going to be protecting me with legal defenses, and then you have up to $1 million to make a settlement with an injured or an accuser? Product recall coverage covers the cost to recall contaminated and mislabeled beer, useful for scaling distribution. I'll also recommend that if you're looking at product recall, then you also need to be thinking about your experimental batches. We had a really, really good, I thought, session through the North Carolina Craft Brewers Guild year before last, where an attorney talked about experimental batches and how we could write them off through the CPA. Totally unrelated to insurance, but if you look at it with your head turned sideways, it might collaborate just a little bit. So your product recall coverage is going to include the logistics and disposal of that product. No just dumping it down the drain, please. Supports brand reputation, making certain that you've got the defense in place. If something does go awry, then you can make sure to address it successfully. Replacement for lost sales, crisis management help. What does that mean? Well, if somebody's selling you a product recall coverage, that carrier is probably pretty adept at handling issues such as massive product recalls. I highly recommend getting some of those best practices from them. What I like to do is challenge my carriers and wholesalers, those who I'm buying the product to provide to people like you. I challenge them like, hey, if you want to do business with this individual, come with me. Let's go educate them on how to be the best at their business and reduce the risk exposure. And then there may also be some regulatory assistance. In short, you might be required to have product recall coverage under different circumstances. We're getting down to it. Stay with me. Workers' compensation. Brewing is a physical and sometimes hazardous job. Workers' comp covers injuries and satisfies some state laws. So workers' comp is pretty interesting. If you don't understand it, what it means is if an individual accepts a workers' comp claim, let's say they get injured on site and they accept that claim, then that means that they relinquish the right to sue your organization. That is the biggest transference of risk that exists. I mean, yeah, I'll go ahead and take the money that was given to me by the insurance carrier, and then I'm going to try and come back after my employer. That's where the hard no will come in. That individual is not going to be able to come back after you because they've taken the settlement from the workers' comp provider. Now, please make certain to check your local regulations to confirm. I don't want to just talk a blanket statements. Typically speaking, that applies. So this is going to be your medical and wage coverage. So lost wages for the individual, or in the event of a death or dismemberment, lost wages for that individual's family. Compliance with some state laws. For instance, just FYI, North Carolina, if it is a total of 3 employees, including the owners and officers, you must carry workers' comp. Lawsuit protection, as I mentioned, that's transference, where you take the risk off of you, the organization, and put it on the insurance carrier, and then improves workplace morale. Why might that improve morale? Is because if somebody does get hurt and there's no workers' comp protection in place, and all of a sudden they're left struggling, that is going to really dampen spirits around the workplace if you've essentially, people think that you've let this individual out to dry. Commercial auto, just quickly, if you put your name on a truck or vehicle, you need to have commercial auto. What happens if you have your name on the truck or the vehicle and you're just taking a barrel every 6 weeks? When you put your name on the truck or the vehicle, you get into an accident and it's listed in the police report that such and such brewing was on the side of the vehicle, the insurance provider absolutely has the right to deny the claim. So please keep that in mind. That would be your medical and wage cover. That could be your bodily injury, property damage. This may cover brewery-owned vehicles as well as employee vehicles. One thing to check on your general liability is, let's say that you've got an office manager and that individual has to go out and buy toilet paper because you're out. If that individual takes their vehicle and goes and buys toilet paper on behalf of your tap room and is in an accident, or worse, causes an accident during that period, essentially they were on the clock doing work for you and you could be liable. There's a very cost-effective called non-owned driver or non-owned auto coverage, which is oftentimes included on a general liability policy, and it's usually in the $250 to $300 price range per year. And that would make certain that if somebody's going to go run an errand, that extends your liability protection to that individual while they're out on your behalf. Flexible or fleet, single vehicles, just do your research, make certain that you shop with a variety of carriers. If you've got more than, say, 6 vehicles to 10 vehicles, I would definitely look outside of the norms, such as Progressive and National General and so on and so forth. Start looking into some of those fleet-specific folks. They're also going to give you some tips and tricks on how to maintain your vehicles and how to hold your drivers accountable. Festival and travel ready. If you go and rent a vehicle, because you're going to go do a festival one time a year, you need to have coverage for when you are putting your business in that rental vehicle and traveling over to the festivities. So general liability, the foundational coverage for claims like slips, property damage, or personal injury at the brewery. When I say property damage, it's damaging somebody else's property. Fun fact that if somebody trips over like I had this example in Georgia, my buddy had a situation where the individual was putting their tray into the trash can and clipped themselves on the corner of the trash can and sued the individual for a trash can that was there. I mean, we're not talking about the round trash cans. It's a big, solid, permanently affixed trash can. Sued the individual for tripping over that trash can, and it was the general liability that came into play. Or if that same scenario, someone were to drop their computer or drop their expensive camera and tries to come after you. Remember, it's not guilt, it's allegation. Injury and property coverage, as explained, includes legal fees. Again, just specify that, hey, are the legal fees going to be outside of the $1 million per occurrence coverage? You can also need to take a look at your aggregate coverage. So if you have $1 million per occurrence and you're like, I got 1 million, 2 million, I must have $2 million worth of coverage. You will have typically $1 million worth of coverage per occurrence with an aggregate, in other words, multiple occurrences in a single policy term of up to $3-4 million, depending, again, on the policy. Make sure to communicate with your agent and ask these questions. That is what this is aimed at, is making certain that you're asking the questions and not making assumptions. Every policy is going to be a little bit different. Every state has different requirements, and most especially, your organization has different needs from the organization adjacent to you. Cyber liability, if you're using a POS, then you could benefit from the cyber liability. I don't have to get into the weeds again, but I had talked about earlier, and I do apologize for this overflow. I talked about earlier of making sure that you, even if you've got 3 different stages, evaluate which one's going to be the best coverage for you. Oftentimes, it's going to be somewhere in the range of here's $25,000 worth of protection. Here's 50, here's 100. Some of them may or may not include ransomware protection. In other words, somebody locks your system down and says, I'm not giving you anything until you give me $20,000. These are all the types of things that you feel completely immune to, but the occurrences do occur and do happen in our industry. And on that note, we are at the end of our wall of words, and I want to see if there are any questions coming from anybody out there.
That was a ton of information, and it's greatly appreciated how accessible and easy you make it to understand.
Sweet. Well, I certainly appreciate, Andrew, the opportunity to get this out there. It's our job to help be resources to this wonderful industry that we participate in. And I know you guys do a great job. So thanks again, man.
I appreciate you. So I have a question for you. I'm just curious, what's the most common coverage gap you've seen in brewery policies that owners don't typically realize until it might be too late?
I would say it's twofold. So I referred to this earlier. It's just like a coverage gap would be their property coverage. If you own the building, and let's say you've owned that building for 10 years, it is really, really frequent that we see somebody put the policy in place and then they're just assuming that the replacement of cost of that building. In other words, if the building burns down, God forbid, how much is it going to cost to build that building back? They just assume that that's being updated, even though our inflation rates, cost of goods, et cetera, are going up at this rate. Well, the insurance company may be automatically increasing your coverage at a nominal rate. And if these two just don't vibe, then you have a claim and you realize that you're underinsured massively. And you would think that the insurance carrier would be looking out to make sure that you're not going to be penalized with a co-insurance penalty. They are not. That is your responsibility and the responsibility of your agent or broker. So that's number one. Number two is workers' comp. There's a lot of misconception about workers' comp and how do you define an employee. Oh, I don't need to cover Bobby, my head brewer, because he's 1099. If you tell someone when to be there and where to be, that individual is an employee. A 1099 compared to a W-2 is just how you're filing that exposure, the employee taxing. So 1099 does not distinguish an individual as a contractor. They're still an employee unless they're giving you a price to perform. In other words, they're saying, all right, here's the agreed objective. I'm going to charge you this much money. I'm going to get it done in this much time. And in that scenario, it's their responsibility to cover themselves with whether it's workers' comp or as well as general liability.
Awesome. Thanks for that. We had another question pop up in the comments. This one says, are there any specific types of claims that are rising in frequency for breweries over the past few years?
Absolutely. Well, we have claims across the board. And you think about our friends over in Asheville this year, you think about our friends over in California. We have got the fire exposure is on the increase and the flood exposure is on the increase. I mean, basically we're getting bigger storms and then we're also getting longer periods of drought. The byproduct of that is bigger wind and hail exposures and more fires. Also, as density increases, some of our on the road exposures, or rather claims, or increases. So, this applies to both personal and commercial applications. But your box truck from 20 years ago compared to your Mercedes Sprinter today is a lot more expensive. And so when we have claims based on that, the cost per claim is going up. So it is affecting our on the road commercial clients, just because it's more every claim that seems to come through is higher value.
Awesome. No, thanks for that. Can you share an example of how breweries save significantly? That's a thing I know a lot of breweries are looking to do by adjusting their coverage or improving something about their processes.
Absolutely. So starts again with the property, just being accurate. So I talked about the building and making sure that your building replacement costs keeps up with the actual replacement value. That's one thing. And you might say, well, isn't that me paying for more coverage? But like I mentioned, your co-insurance rate has a tremendous impact on the cost per thousand or rate per thousand. So you might, in many instances, we have, it's called $100,000 building, but really it's $120,000 to rebuild that. So we tell the carrier, you know what, we're going to insure this to 120,000. If you compare that price tag to what it was to insure it at 100,000, but with an 80% coinsurance rate, in other words, I'm 80% accurate, I'm paying less money for more coverage because I'm more accurate with my replacement costs. So that's on the building itself. The next one, of course, is the go through your equipment list. Go through your brewery tap room, your organization, room by room with a phone, do a brief 60-second recording. Now, if you're going through a large warehouse or where you're doing your brewing, different scenario potentially, but at least look at what your active equipment is and put a today value on it, and then compare that to what you're paying for. Oftentimes, I see people more often over insuring for their property rather than under insuring, because maybe somebody didn't say, oh, this is exactly how much you need. And maybe somebody just made an assumption. Well, typically breweries of this size need about this much property. The more accurate you are, the more cost savings opportunity there is.
Awesome. Now, thank you. You mentioned a few types of areas that are often misunderstood, like equipment breakdowns, recall insurance, liquor
Mm.
liability. Can you speak to each of those just a little bit more to stress the importance?
Sure. The equipment breakdown, as mentioned, it's interesting how that can really offset your business. Another one that I didn't even put on there because it's baked into other endorsements or other types of policies is uh, basically if I shut my doors, business interruption. Oof, come on now. My business interruption. So business interruption can be tied to your property and as well as your equipment breakdown. So my equipment breakdown, like I mentioned, if it's struck by lightning, it's going to be on the verge, probably going to fall under the property because that's a covered peril. But if it's a power surge, whether it's even if it's external, may not be covered by your property insurance. And that's where that equipment breakdown comes into play. And then it grows. It's not just, well, man, I've got this $6,000 compressor that just blew up. Well, now I've got some material or finished product that I just lost that was in the cooler that sat. We didn't have an alarm. We didn't have a thermostat alarm on there. I know you've got some great examples of how the temperature readings and tracking can really help encourage cost avoidance. But let's say you don't have your alarm on there, you've got some finished product, it goes bad. Now you've got your claim. Now you weren't able to ship that out, so you've got some lost income, or you weren't able to open the doors because your air conditioner went out. There's all types of examples and various types um, of claim of exposures that you're going to be able to capitalize on. I guess let me clean that whole thing up. So it might start with equipment, but your equipment breakdown is just everything that's not included in your property coverage, and may have peripheral coverages that help increase the amount of money that you get back in the event of a loss. I hope that's a little bit better description.
It is. No, thank you. We have one final question come through. This is an interesting one. It says, does insurance ever cover brand reputation damage in the event of a public incident or recall? If not, how should breweries prepare for this?
Yeah, so that's a phenomenal question. And the short answer is yes. And the only reason I say it with a question mark at the end is every broker agent is going to say, I can't ever speak on behalf of the provider, right? But that being said, it is the goal is to make certain that you've got the support, both financial and advisory. Like, hey, let me help you help walk through this. You should not feel as a business owner that you're just going to call the claim number and know exactly how to file that claim. We are businesses. It's a complex contract. The insurance is a contract. That's complex. And so I challenge everybody as we close out on this one, have these conversations today. What's my win if? Not what if, but what's my win if? And talk to your agent or your broker and say, when this goes down like this, what's the standard operating procedure? Because those are the types of, that question was so perfect to say, well, how is my reputation going to be saved? What are some best practices? What can I expect from the carrier? Those are the types of things that should then be put in your what if manual, so to speak, so that if something like that happens, that you've got the process defined rather than waiting to the event to happen and then figuring it out what is and is not covered. Is that an okay explanation?
I think that's an okay explanation. I'm sure they can reach out to you if they have any additional questions. And with that said, we greatly appreciate you being here today, sharing your insight. But for anyone who's maybe watching after the fact, who wants to reach out to you and kind of connect, what's the best way for them to connect with you?
Email, absolutely. And I'll stress it. I don't care where you're at. I don't care who you've got your policies through. I think that folks like Andrew and I are here to be a resource and answer questions. It really, we're not here to solicit it. We enjoy this industry very much. So,
and what is your email one more time?
Steveo, Steveo at horizon-insurance.com.
Awesome. Well, Steveo, always great to see you. It was fun hanging out with you at the North Carolina Craft Brewers Guild event just a few months ago in Wilmington. I hope to see you again eventually. And everybody who's been tuning in live, thanks again. We'll see you soon. Cheers.
Thanks, guys and gals.